Welcome to CEO Diaries, Season 2. We have with us Mr. Nilesh Shah, the MD CEO for Kotak Asset Management Company. Under his leadership, the Kotak Asset Management Company has achieved the target of 5 lakh crores of AUM. We are privileged to have him on the show. Thank you so much for sparing time for the show, sir.
My pleasure to be here.
Let's start with the global economy. And in the global economy also US predominantly, as I believe US is the mothership of all the markets. That is taking care of the rest of the markets would probably be in a better position. Now there are too many things happening in the US. The first part is the Fed, which has probably done a great job of whatever they've been doing as far as their inflation data point is concerned, your job data points are concerned, and the liquidity constraints that they've been able to put in. And second part is Trump coming back, and the tariffs narrative. Usually we've seen that whenever there's too much of optimism, the consensus usually turned out to be wrong. How do you look at the US market?
So to me, Fed has done a great job. US inflation has come down to 3%, little higher than Fed's target of 2%. But GDP growth is still positive. It has not gone into recession. So Fed has applied accelerator and brake in a manner where inflation comes down, growth doesn't become negative. I think they should get good marks. Now, about President Trump, could we have ever imagined that he will say, Canada, you are my 51st state? Or he'll say, Greenland, I'm taking it over. Or Panama, this canal is mine. I mean, he's completely unpredictable. But there is a method in their madness. He probably wants better terms on Panama Canal, and that's why he has hit them so hard that they'll agree to it. He wants to ensure that US growth is balanced. It has $36 trillion of debt. That's huge. US dollar is still reserve currency of the world, but it's a declining reserve currency. And US does run very, very large trade deficit, almost 5% of their GDP. We have seen that if your country suffers from twin deficit, high fisc, high trade, you some point of time pay a very heavy price. And the President Trump is trying to reverse that. He's cutting fiscal deficit by Dodge, which is managed by Elon Musk and Vivek Ramaswamy. He's trying to manage current account deficit by raising tariffs, threatening people, creating win-win situation for America. I think forget the theatrics. What he's doing is right. How many people gave Argentinian president any opportunity or any chance of rectifying their economy? But he delivered. I think US will do well under President Trump. The theatrics will keep us busy, but the underlying work is really good.
On the GDP, the US GDP, although there's a growth, the trending growth is there. And as you rightly said, the inflation is under control and the other optics looks pretty healthy. But having said that, the debt, the balance sheet debt, which is more than 36 trillion now. And as we say that every $1 of debt that US raises, the GDP increases by 58 cents. Isn't it too much of a scenario to be, too difficult of a scenario to come out?
If you are drug addicted, taking drugs is bad. But can you become de-addicted overnight? My answer is no. You have to go through a painful process of readjustment. I think US will have to do the same thing. They are addicted to debt because if they raise $1, they can only create 58 cents of GDP. Now this de-addiction will take time. It will involve pain. The one attempt is to cut government spending by $2 trillion. Second will be to improve return on equity for US government by creating better tax compliance. They may even tax the rich guys little more. Unlike India, where or maybe just like India, the tax burden is not equally distributed. There are many rich Americans who have their vehicles in Nassau, Bahamas and
all the yachts,
all kinds of islands, and they don't pay their fair share of tax. So my feeling is that US will take time to recover from this drug or debt addiction, as I call it. But it's a great country. It is blessed with resources, and it attracts best talent of the world. So it's a giant which is awakening under President Trump, and they should do well going ahead.
So let's go to the second largest economy of the world, which is China. A lot has been said this year, specifically on China. China stimulus was there. We saw the Chinese market from the bottoms almost 30% up this year. And the trade surplus is more than 1 trillion, which is one of the largest. Where do you see the China story?
China is a miracle economy. It is the largest economy in terms of purchasing power parity, probably ahead of US. Otherwise, it is second largest in dollar terms. And in some of the critical technology, it is way ahead of the rest of the world. But their growth is leveraged. The combined debt of China is higher than US or Europe as a percentage of their GDP. And their population is, getting aged. So China, in absence of full transparency, it's very difficult to take a call. Their economy has done so well, but the corporate earning per share is up only 11% in last 10 years.
Oh.
In India, corporate earnings went up by 166% in rupee terms.
Wow.
In China, they went up 11% in renminbi terms. Chinese economic growth was far higher than India, and yet corporate didn't grow. So it's a miracle economy. What it has achieved is miracle. How it has achieved is another miracle. So you can't really take a call on China as to how long their luck will run.
Now let's come to the third part, which is one of the larger economies growing at the fastest rate, which is 5 to 7%, which is the Indian economy. India's story, a lot has been talked about. Where do you see the India story going?
India, we get very happy at small achievements. We are not aiming for bigger things. For example, we are doing work which is very good to give us 5, 6, 7% GDP growth. But we are not aiming for 10% GDP growth. Because to get 10% GDP growth, we'll have to take hard decisions. For example, land reform. Today, because farmers are vote bank, you don't want to make land reforms or land acquisition easier. Labor reforms. While the organized labor force is 3-4% of total labor force and unorganized labor force have no benefits, you still don't want to make labor laws flexible. Judicial reforms. Cases take much longer time, and there is a lot of uncertainty about rule of law. How can capital come if there is no rule of law, or there is uncertainty about rule of law? And farm reforms. Agriculture has 75% of Indian population working on it, but it is still stuck in British era laws. A farmer has a lot of restrictions, constraints, and they all want government guarantees. They don't want to accept market reality. As a society, when government sells PSUs, we think they are selling family jewels. But someone like Air India, which sucked 70,000 crore of capital from government of India, was like keeping elephant flying. We all know elephants can't fly, but we made an attempt putting 70,000 crore to fly elephant. Why can't Air India be divested when it was 100% monopoly of Indian Sky? There was no business for government to be in the business of running airline. And look at with Tata's, they have already brought down losses. So, because we are not taking hard decisions on land reform, labor reform, farm reform, judicial reform, strategic divestment, our growth rates will unlikely to be in double digit for a sustainable basis. We may go there when everything is good for us for 1 year, but we won't sustain it for 20 years. We will grow at 5, 6, 7, 8% because what we are doing is good enough for us to become fastest growing major economy. It's like we need Sunil Gavaskar attitude. When Sunil Gavaskar used to score a century, after scoring century, he'll take a fresh card. नया इनिंग एक और सेंचुरी मारनी है. The current generation of Indian cricket has एक सेंचुरी मार ली, बहुत हो गया. 50 रन हो गए, बहुत हो गया. We need Sunil Gavaskar attitude.
A little more on the India story. Like we are seeing there are two Indias emerging out. One is obviously the Bharat that is actually growing Even we look at the demat accounts or mutual fund folios and all, it is growing a little more in the Bharat side of the India. Also, if you look at the monsoons have been decent. I think we have more than average amount of waters, in all the reservoirs. What is the story? The consumption still doesn't seems to be at at the levels that it should have been.
So, see, India is not heterogeneous society. Every 12 kilometers, language change, cuisine change. We are a continent. We are not a country. We are as big as a continent in terms of diversity and complexity. Now, rural India today is poised well because Kharif crop was bumper, Rabi crop should be good. Ladli Behna schemes put money in the pockets of rural consumer. Urban consumption is soft because there was a generation which used to earn money and then spend. Now there is a small generation which borrows money to spend.
Okay.
But someday you have to pay EMI. You can't borrow to pay EMI for long. Those EMI burden is now hurting consumption on one side. Second, pattern of consumption has changed. If you want to buy 1,50,000 rupee worth of mobile phone, you are bound to cut something. Your bike replacement instead of 5 years will become 8 years because you are now spending 1,50,000 rupee on buying mobile phone. So the pattern of consumption has changed, and which is why we see staples not doing that well, whereas consumer electronics may be doing well. I mean, today my driver would like to have AC at home. Earlier, 20 years back, I would have thought twice to buy AC. So things are changing. I think overall India growth story is good. We are doing good enough to get fastest growing major economy at 5, 6, 7, 8% growth. I hope and pray we will take hard decisions to go to 10% growth.
I'll just take a moment here to even touch base on the IPO markets. This has been an unprecedented year for IPOs. The last highest I think was about $16 billion and this time it is 22 billion. 317 IPOs came in. Most of them, more than 60 plus I think if I'm not wrong, are 50% over and above their listing price. The IPO market seems to be booming pretty much, and the story that they are saying, which obviously is the resilience of the Indian market is far different than what the equity markets at large are saying.
So many good promoters priced their IPO below fair value because they wanted to give pleasant experience to investors. Second, today a lot of IPOs are driven by institutional investors and they demand a discount to listed prices because promoters' track record was uncertain, unknown, unverified. My guess is that those things have resulted into IPOs generally giving better experience to investors. And to me, IPO or listed investment process remains the same. You try to verify promoters, see their vision, invest based on valuation. I think it's good that IPO market has deepened. More number of companies are coming. They are able to raise capital and they'll be hopefully able to make investments and create better growth. Sunshine is the best disinfectant. Okay. Transparency is best. When companies get listed, they become far more transparent. They compete to raise capital. And I think they will become more productive and more efficient.
Now, after the equity markets, we were very positive about the markets. All of a sudden, some corrections started happening. Now, maybe an investor is feeling like, we usually give parlances of Mahabharata and Ramayana, like an Abhimanyu, whether it is getting into a Chakravyuh or not. So, what is your view for a new investor now getting into the markets?
There was one event of Business Standard where one of the persons stood up and said, Nilesh bhai, why are you raising money at this time? Aren't you repeating the same mistake of 2000 when technology media funds collected a lot of money and investors had bad experience? And I said, would you like to short Indian market for 10 years? He said, no. I said, 5 साल के लिए तो short कर दे भाई, तू इतना negative है. No. 3 साल के लिए कर दे भाई. No. People who are criticizing that markets are expensive, markets are not worthy of investment, are not willing to short the market. It just shows that they want correction so that they can enter. Now, markets are never kind enough that it will give you easy entry.
Please let them time the markets.
My feeling is that our markets are fairly priced. Can they go down from here? Answer is yes. If there are aggressive sellers, especially FPIs, no one will give them easy exit. The fair value of market in COVID time was probably 10,000 Nifty. But it went all the way up to 7,500 before recovering because FPIs were willing to sell at any price. No one gives anyone easy exit. मुझे पता है सामने वाला desperate seller है, मैं तो नीचे करके ही लूंगा. So markets can go up and down behind fair value, above fair value, below fair value based on aggressiveness of buyer seller. But are we expensive? Market answer is no. We are trading around our historical average. Corporate profitability is good. GDP growth is still faster than most other parts of the world. Governance standards are good. So my feeling is that you invest with moderate return expectation. Last 5 years were exceptional. हर छठा stock out of 10 stock has doubled. वो time नहीं आएगा. But people will make money in equity market better than other asset classes over a period of time.
So out of the NSE 100, 67 have doubled in the last 5 years. Out of the BSE 500, I think about 307 have doubled in the last 5 years. The growth story of large, mid and small is unprecedented in the last 5 years. And predominantly small caps have delivered actually 2x the returns. And in the recent past, which is the last 3 months, while there is an outflow of FIIs from the large cap, we still see mid and small showing resilience. What is your view on the small versus large story?
If we see 20 years return, large caps have outperformed small cap. If we see 5 years return, small cap has delivered double the return of large cap.
Okay.
So at a valuation, small cap is buy. At a valuation, they are not a buy. Ideally, if you can identify a small cap which is going to become large cap, you will make maximum money. But please remember that an individual investor can do, a fund manager can never do. I can't have more than 10% of a fund in a company. Even if I got a company which is going to go from small to large, I'll have to keep on booking profit every time it goes above 10% of my fund. So my recommendation to investors will be that this is the stage where you be equal weight to equity. Within that, because large, mid, small returns are going to narrow down, it's not going to be double of large cap. Try to be marginally overweight large cap and marginally underweight small cap. But most important thing is to invest in companies where float is high. See, there are many stocks where float is controlled. Few people own entire floating stock of the market. They can put any price they want. Don't get lured by past return and high valuation. Invest where there is high floating stock, where price discovery is market determined, not market influence.
This year is predominantly the years of sector rotation. We've seen a lot of sectors which are quality, contra. Some sectors predominantly were not doing very well in the last 3 to 4 years are looked upon as one of the growing sectors. Which sectors do you think will do well in this year?
Rural consumption is likely to better because of agriculture support and government spending. So companies which are engaged towards products, consumer staples which are towards rural consumption, they should do well. Pharma, IT, both should do well. IT, the results are not coming as per expectations, they are subdued. So maybe after a correction, IT should be bought. Pharma is Harfan-Maula sector, should do well. Valuations are reasonable. One sector where we believe there is good opportunity is private banks and NBFC. There are many companies in banks and NBFCs which are overexposed to unsecured lending, to microfinance. Their credit culture is not good. They'll pay a price. But those companies which are not which are having good credit culture, which are not overexposed to unsecured lending, microfinance, and whose valuations have corrected, they should do well. So my recommendation is that anyway, this is the year of moderate return.
Yes.
And within that, you will have to determine your entry prices well. At a price, you will be able to generate double-digit return. And at a wrong entry, you may not even get single-digit return. So be very, very careful about the price at which you are buying the stock. Don't just rush in because the stock has moved.
Coming to that point, quality at a reasonable price. We always see that, as one of the statement, most of the fund managers are looking. There's been a lot of discussion now on quality versus value, contra versus momentum. That things are going to change. So where do you see those discussions heading?
So to me, I have to buy good companies to make money. Now, yes, it can be compartmentalized in value, growth at reasonable price, contra, momentum, so on and so forth. As a portfolio holder, try to put exposure across all the strategies. Sometimes momentum will run, sometimes contra will run, sometimes value will run, sometimes growth will run. If you try to chase that, okay, momentum is running, so let me go there. Oh, now value is running, so let me go there. You are most likely to get disappointed. So, build a diversified portfolio of all the strategies. Different people, play differently. Suppose if all the players in Indian cricket teams were batsmen, will they win the match? Answer is no. If everyone was a bowler, will they win? Answer is no. If everyone was a great fielder, will they win? Answer is no. You have to create a mix of good wicketkeeper, good batsman, good bowler, good fielder. Then you create a winning team.
Any themes that you would want, the Indian investor to look at?
So one theme which I personally recommend to people is business cycle.
Okay.
See what happens when there is a broad-based rally like last 5 years. Gada ghoda sab chalega. All sectors will give you return. But we do know that there are cycles. Sometimes banking does well, sometimes capital goods does well, sometimes real estate does well, sometimes consumption does well. Now, every time you try to jump from one cycle to another, you end up paying tax. But if you go to a business cycle fund and leave the fund manager to make the allocation, the deferment of tax happens. And the fund manager occasionally will be wrong, but majority will be right, otherwise he won't have job. So, he will be doing allocation in different business cycles and yet not pay the tax for you. This combination of professional management with deferment of tax will create a lot of value.
Sir, I've been going through our market outlooks, and throughout the year. And one of the key important points that I've observed in our market outlooks is we've gone right more than wrong. And one of the key observations in the market outlook, we've been able to find the trend, the gold and silver trend, much before the market. And we couldn't have been more right about it. What is your view on gold and silver right now and multi-asset as a category?
Fortunately, we were able to capture gold up move from COVID days quite well. And COVID call was saying that if the cost of produce mining gold is $800, $900, at $1,200 the prices are too attractive. Now the call has changed to central bank behavior. They are like Indian housewives. Sona kharid lete, bechte nahi hai.
Competing with the Indian housewives.
And their buying is as good as Indian housewives. 1000 ton sona kharidte पिछले 2 साल से. So it is the central bank buying which gives us confidence that gold will do well. It has done exceedingly well in last 5 years. Going forward, returns will moderate undoubtedly. But it is a must-own part of an investor's portfolio because central banks are buying gold. And that can create much higher prices than today. What central bank is to gold, industrial consumption is to silver. In electronic silver is used, in food silver is used, in many other industry silver is used. Supply is limited, demand is increasing, prices will move in tandem. So both gold and silver should be part of an investor's portfolio.
Sir, I would also like to take a moment here and ask you to share some pearls of wisdom for young CEOs like me on trending the next 10 years of the India story.
So one, please understand your risk profile. There are people who sold during COVID and converted notional loss to real loss. And there are people who bought during COVID and made a lot of money. The background education was similar to these people. They had access to same resources. And yet both of them behaved differently.
Right. Yeah.
Because the risk profile was different. So अपनी फितरत आप खुद जान लीजिए. If you bought during COVID, you are aggressive. Go for risk. If you sold during COVID, you are a very conservative person. Please play safe. If you didn't do anything and allowed your SIP to continue, then you are average person, play average game. आप राहुल द्रविड़ हो तो वीरेंद्र सहवाग बनने की कोशिश मत करिए. आप वीरेंद्र सहवाग है तो राहुल द्रविड़ की तरह खेलने की कोशिश मत करिए. Be fair to yourself. Second, be a long-term investor. When last 5 years have spoiled us, everyone thinks making money is buying today, selling tomorrow. But पैसा बनाना इतना इजी होता तो सब बिलियनर बन जाते. इतना इजी नहीं है, मुश्किल है. So please invest for longer term. इंडिया ग्रोथ स्टोरी तो ट्रेलर हमने देखा है, पिक्चर पूरी बाकी है. आपको जल्दी क्या है? एंड थर्ड थिंग, bet big when you are confident. कोविड का समय था टू bet big. आज bet cautiously. So you have to get the confidence to bet big. जब लोहा गर्म हो तब हथौड़ा मारना चाहिए. हम लोग अदरवाइज हथौड़ा मारते रहते और जब गर्म हो तो भाग जाते हैं. तो ऐसा मत करना.
So your journey, especially at the Kotak Mahindra Asset Management Company, has been unprecedented, inspirational to say the least. When we look at leaders, when they move to a new company, they have a set of their own, people that they move along, and then there is another story or journey for that company. But in your case, what strikes out is you haven't done anything of that sort. You came in here with the existing set of people and turned this company around. There's an unprecedented growth, and congratulations for achieving 5 lakh crores of AUM. It's pretty huge in the Indian market, specifically with so much of competition around. How have you been able to do it? What are your key learnings in this journey with Kotak?
That always take decisions on 2x2 box. The first box belongs to Bhagwan Ram. Bhagwan Ram's objectives were always right, and the means to achieve that objective was also right. If he wished, he could have asked Hanuman to bring Sita home. But no, he went and fought Ravan. As a CEO, your goals and your means to achieve those goals both should be right, yes. But we are in Kali Yuga. So the second box is of Bhagwan Shri Krishna. Krishna Bhagwan's goals were always right, but means to achieve those goals could be compromised. So to win war of Mahabharata was critical. If that means I have to tell Yudhishthir to say Narova Kunjarova, so be it. If that means I have to ask Arjun to use Shikhandi to kill Bhishma or injure Bhishma, so be it. So sometimes you can have goals, you can have means for goals little bit compromised, but your goal should always be right. The third box is Duryodhan. Duryodhan के goals गलत थे, but means के ऊपर बड़ा पाबंद रहता था. When he was fighting for his life at the end of the battle, he didn't hit below the belt to Bhim. Bhimsen had to hit him. Never become Duryodhan. कि means सही चुने, but goals ही गलत. And finally is Ravan box. रावण भाई को no goals से लेना देना था ना means से. Both were compromised. Never ever become Ravan. So as a CEO, when you have to take a decision, always be Ram. Sometimes be Krishna because it's Kali Yuga, but never be Duryodhan, never be Ravan. That's good enough for you to run your business.
That's really nice. Thank you so much for your time, sir. I'm very, very sure that our viewers are going to enjoy this interaction about the Indian markets, about your personal wisdom, especially even for the CEOs, all the way from the retail investors to the CEOs. I am really happy to have you on the show. Thank you, sir.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.